to this live special where we're looking at the latest developments on the UK's path to leaving the European Union. UK equity markets drop, but sterling holds its gains following the meaningful vote last night. Does the vote result take us closer to a soft Brexit, or is the UK now on a path to leave on WTO terms? And what does all this mean for the UK economy at a time when the global economy is slowing down? Well, joining us today around the table is Alexandra Kellert, an analyst at Control Risks, where she is responsible for providing security, political and operational risk analysis on Western European countries and EU institutions. She has taken the lead on the company's Brexit analysis and produces regular updates for its online subscription services. Also, round the table with us today, Peter Dixon has close on 30 years' experience in macroeconomic analysis. Currently, he's Commerzbank's global financial economist based in London. Prior to assuming that role, Peter spent 4 years as head of Commerzbank's international economics group. Now, later during the show, we'll also be speaking with a chief executive of a company that is a profitable, dividend-paying, London-listed business that has exposure to Poland, Romania and the UK. That's Ben Habib, the founder of First Property Group, an award-winning commercial property fund. And we'll also be going to the IG trading floor to hear what clients are doing as the markets gear up for that vote of no confidence today that's been tabled by the opposition Labour Party. That's scheduled for 7 p.m. today. Now, Brexit has dominated the headlines for over 2 years now, and we are, well, effectively no closer to knowing what will happen after the UK leaves the EU on the 29th of March this year. Or is it now set in stone that we'll be leaving, and that's the end of it? The uncertainties pushed the pound down about 15% against the dollar, and the same sort of margin against the euro since the referendum back in 2016. What's the market looking like? We'll go first of all to our guests before we catch up with what clients are doing. Alexandra, first of all to you as a political analyst. Doubtless you were watching the vote last night. What was your immediate reaction?
I think surprised at the scale of the defeat for the government. I think we were all expecting a defeat, but it was really a lot higher than the number of people who voted against it than we were thinking.
Yeah. Back with you in just a minute. Peter, in terms of the vote last night, we did see a little bit of movement in sterling. Which markets are really affected by the political developments that are occurring at the moment?
Well, at the moment, I mean, markets have been surprisingly benign. I mean, obviously, we've seen a little bit of a wobble in sterling initially, but then it recovered quite sharply after the full implications of the vote came through. I mean, the one thing we're looking at is volatility, equity volatility, currency volatility, because that, I think, is where the action is. That reflects markets' level of uncertainty. Yeah.
OK. All right. Back with you both in a couple of moments' time. Our experts are here to help you understand and trade these markets and to answer your questions, be they political or market-based questions. We're streaming across IG.com, the IG trading platform, YouTube, Twitter and also Facebook. So join the debate and send your questions directly to our experts here using the hashtag #IGBrexitChat on Twitter and Facebook, or you can put them in the comments section on YouTube or on the IG community. Now let's head to the trading floor here at IG first of all, where technical analyst Josh Mahoney is monitoring client activity. Josh, as I said at the top, sterling down around about 15% against both the euro and the dollar. But interestingly, the pound has gained since the lows last night, more against the euro than the US dollar. What's the dynamic for sterling at the moment?
Yeah, certainly. I mean, look, the fact of the matter is we saw this massive defeat, crushing defeat for Theresa May, but there's positives and negatives to this. Certainly it raises uncertainty in terms of where we're going next, but it also raises the possibility that we could have this so-called people's vote. And of course, if we did see a vote, then of course some people might think that we might not necessarily leave in the end. So certainly at the moment we're not necessarily seeing a huge amount of directional volatility, a lot of uncertainty, whether it be the pound or whether it be the likes of the FTSE 100. But certainly it's worth being aware of the fact that when you're looking at the pound against the US dollar, yeah, certainly there's not too much in terms of directional movement at the moment. But look at against the euro, of course, we have been seeing a sort of shift in tone from Mario Draghi, more towards the dovish side of things. And certainly that's the one that's the big mover at the moment as we continue to see euro sterling move lower.
It's interesting, isn't it? I mean, as I said, since the date of the referendum, we've seen the same sort of percentage loss, and I guess to some degree this has played into some of the growth that we've seen in the UK. But is the move that we've seen in the greater move we've seen against the euro likely to continue, or have we seen all of the upside we're likely to see for the time being?
I mean, look, obviously this is all going to be dependent on how things begin to play out. The way that I see it, and I'm a skeptic, is that I don't necessarily know that there's too much of a deal to be made where you have enough of a consensus within the UK and it also pleases everyone in the EU for everyone to agree upon this. And if we did see that kind of impasse, then you're likely to see this topic of a potential second vote come to pass. And certainly the big question would be, is Remain on the card? If it is, then all of a sudden you're talking about sort of historical standings of the pound. All of a sudden the pound would seem very cheap and you're likely to see more interest in it, as we've seen recently. So, you know, as we see the possibility of a sort of no-deal Brexit sort of fall off the cards, and everyone seems to be very much against that, you're seeing people moving into the pound. If we see the possibility of a second referendum of some sorts, certainly you're likely to see a continuation of that move.
Okay, all right, Josh, we'll pick up all those points with our guests in just a couple of minutes' time here in the studio. Now, earlier my colleague Victoria Scholar caught up with the Chief Executive of First Property, Ben Habib, and asked him what he's hoping for from Brexit.
And my desired outcome is a resolution which ideally gets us out of the European Union and does it in a clean manner. I think the Prime Minister's deal would have been absolutely fine if the backstop hadn't existed. And any deal which doesn't subjugate us to the European Union in the long term would, as far as I'm concerned, be fine, including, as I mentioned, a no-deal outcome. But I suspect what's going to happen now is that Parliament is going to examine its navel for the next 2 or 3 weeks, realise that there's actually no consensus for any particular form of deal with the EU, or indeed any deal that the EU itself would accept. And because Parliament is inherently Remain in nature, I think we're going to have a second referendum. And I imagine that the motion on that, on the referendum ticket, will be between a no-deal Brexit, which is, you know, a sort of ideologically clean Brexit, versus Remain.
So clearly there's a lot of volatility ahead for the pound, and this is going to be important for you. You've got operations in Poland, Romania, but also in the UK. We saw the pound pare some of those losses after May's defeat. Do you think we could see further downside, and to what extent? You said earlier that you were expecting a bit of downside. What key levels should we be watching for?
Yeah, well, I was surprised by the pound's movement yesterday. It's very odd that a country's currency should strengthen on its government being, you know, heavily defeated in Parliament. I've never experienced that in the United Kingdom, where you've had a political event that's, clearly bad for the government and sterling strengthened, which says a bit about what the markets thought of her deal. I would have thought sterling should be under pressure, but it's been incredibly robust. And I think the indication from that is that the market reckons we're going to remain in the EU in some shape or form, or we're going to have a soft Brexit. I suspect the market's overconfident. I don't think we're going to have a soft Brexit. I think we're going to have another referendum, and it'll be a binary choice between Remain and a no-deal Brexit. And pound will probably sit on the fence until the result of that is through. Though, as I mentioned, I would have expected the pound to be weak at the moment, to be under pressure at the moment.
So if we find ourselves in a second referendum situation and Leave wins, we see further weakness in the pound, that's going to be win-win for you, surely?
That is a win-win for the short term. I think we will have 3 to 6 months of a weak sterling, and during that period we'll lock into the favourable FX rates that will become available to us by selling forward euros, bolstering our profit line into 2020 and 2021. And we'll also take advantage of any market weakness in the United Kingdom we've got about 100 million left to invest in our offices fund, and we use that weak moment in the markets here, I think, to get the rest of that money invested.
Ben Habib from First Property Group talking there to my colleague Victoria Scholar. Let's just quickly recap how you can get on to ask our guests questions. And as I said, we're broadcasting across a number of different platforms. You can join that debate and send your questions directly to our experts here using the hashtag IG Brexit chat on Twitter and Facebook, or as I said earlier, you can put them on the comments section on YouTube, or join us, those IG clients that have access to the IG community, which is a forum upon which you can discuss with fellow clients and those that are interested in asking our guests some questions. Peter, I want to go to you first of all and pick up on a couple of points that Ben was talking about. What are the markets pricing in at these levels? So we're talking about sterling here against the euro at 112.90. We've got sterling against the US dollar at the moment trading at 128.66. What is sterling pricing in? Ben was talking about the surprise that he saw in the higher levels for sterling overnight against the euro, especially because even though the fact the government's been defeated, sterling is gaining. What is it pricing in?
Well, I think generally speaking, the market is pricing in the possibility of some form of Brexit. Okay, that's why we had such a sharp move downwards compared to certainly the autumn of 2016. Thereafter, we're not entirely sure what's going to happen. So I think the market overnight has said, well, there's a possibility that the hard Brexit might not actually happen. Of course, it depends on the politics, of course. And they've been cautiously optimistic. But I do think that if we were to see a hard Brexit, a reversion to WTO rules or whatever it is, you would see a much weaker sterling. So I think it's kind of pricing it a soft Brexit at the moment.
Yeah, on that point actually, Ben was talking about 3 to 6 months of weak sterling. Do you think that's right, or do you think the winter that might grip the the UK markets that some have been saying, and also the British economy, do you think that 3 to 6 months could be extended further?
Well, it could be. I mean, it's very hard to predict market timing. I certainly would think 3 to 6 months is a reasonable time period, because that's the period over which much of the Brexit impasse, one would hope, would be resolved. So we're talking about the middle of the year, the summer. At that point, hopefully we'll have more direction. And at that point, I would expect to see a bit more direction return to the markets. Yeah.
Alexandra, he referred to the second referendum. Before we get to that question, I want to ask about the vote of no confidence that's been tabled by Jeremy Corbyn. Your thoughts on that and the need for that?
Well, I think Jeremy Corbyn was essentially forced into it by both the scale of the defeat and also May standing up and saying we will make time for a confidence vote tomorrow. In terms of what's going to happen, it looks like the Tories are rallying around their leader. The DUP have come out and said they will back the government. I think it's very unlikely that the government will lose this one.
Now, the Tories have blown their chance, or the ERG within the Conservative Party, the European Reform Group, have blown their chance of removing Theresa May to get someone in of their choice, perhaps maybe with a slightly more hard edge to their political bargaining with the European Union. So she's now happy there for much of the next year. But this Labour vote of no confidence, my understanding is that they can do it again and again and again at will.
Absolutely.
That serves no purpose.
It doesn't, unless something fundamentally changes, and those members of the Conservative MPs who want to get rid of Theresa May decide that maybe actually there's a strategy there whereby they can defeat her in a vote of no confidence and then try to position someone else in, because if the government loses a vote of no confidence, they have 2 weeks in which to essentially win another one. But it would be very unlikely that Theresa May would stay on in that scenario. So that might be a theory that they might start to think through, depending on how things go.
Yeah. Okay. Well, let's assume that all goes through, and the vote of no confidence is not carried through, and that we have the opportunity for Theresa May to go back once again to look potentially at renegotiating the deal to a point where we can get some sort of agreement. If we don't get that, we then face with the 29th of March, which is the deadline for Article 50. Winding the clock back, do you think it was a mistake to trigger that when we did, or do you think they had an option at the time to do it at that particular point?
They did have an option, and I think there is an argument that the UK government should have worked out exactly what kind of Brexit it was looking for before starting that clock on the 2 years.
Yeah, okay. Let's now take a look at that Article 50 and ask the question about what happens now, because my understanding is that from a recent judgment from the ECJ was that we as a nation could unilaterally decide to cancel that or delay it, or what?
So the ECJ ruling says that the UK can choose to revoke their submission of the Article 50 provisions. It does not say that the UK can unilaterally extend the Article 50 period. That would require the EU 27 to make that decision.
And do you think that is likely to happen? Bearing in mind there is now a difficult period coming up because we've got, I think the back end of May, we've got the European elections. At the moment, of course, the UK will not be part of that. So that puts an extra time limit on all this. How does that affect the potential for moving out Article 50?
Well, I think it would depend on what situation we're at if there were an extension. If it looked like there were, it just needed a few more weeks and there were things that could be tied up quite quickly, then that would be relatively straightforward. You could say, OK, you can have either until the elections or until the new European Parliament takes office in early July. However, if it's a more complex thing, if there were a move to have a second referendum, I think it would be very difficult to do that within that time frame. And so you would need to look at provisions whereby either the UK could participate in those elections or some other kind of agreement could be reached.
Yeah. Peter, one of the questions is, where is volatility likely to appear in the near horizon? Alexandra was talking about a number of points there to watch out for in terms of the political developments. As we saw last night in the meaningful vote, there is some volatility around these events, albeit the fact we ended up where we started out in sterling against the US dollar. What do you see as the areas to watch out for in terms of volatility in the markets and those events to watch out for that could provide that volatility?
Well, I think one of the problems that we face is differentiating between what's Brexit-related volatility and what is general volatility. Because if you look across the whole spectrum, since, I guess, the autumn of last year, you've seen a significant rise in equity volatility. You've certainly seen currency volatility, particularly in sterling, spike up over the course of recent weeks as well. Some of that is Brexit-related, but I think a large chunk of that is or reflects the deteriorating international environment, what with concerns about China and all the rest of it. So when it comes to watching where will the volatility arise, I think it's primarily going to be in the currency markets because they are, if you like, the barometer of the current market thinking on what's happening with regard to Brexit. We haven't seen an awful lot over the course of the past couple of hours, which again suggests the markets are pretty relaxed about things. But if we were to start to get concerns about whether we are going to extend Article 50 or not, that's when you'll start to see volatility spike up. I really can't see volatility going down a huge amount over the course of the next, let's say, couple of weeks. It's really sort of a unidirectional move with volatility spiking up on bad news rather than coming down on good news.
You mentioned the fact that we've got a global environment which is seeing slowing growth amongst many economies, and of course we've seen recent movements from China which potentially could indicate that there is perhaps maybe some slower growth coming through in China. How does Brexit play into that? How big a deal is Brexit to the international community?
Good question. In a stable market environment, probably not as much as people might have you believe. Obviously, it's a problem for the EU economically if there's a hard Brexit, because clearly it would cause problems for growth in the Eurozone. But on the whole, the Asians don't really care that much, and obviously they're the big driver of growth. But I think in an environment where investors are concerned about where to park their money, either to make some money or just to preserve their capital, Brexit starts to have bigger implications because it's another risk factor in a series of what appear to be mounting challenges for investors. Yeah,
another question is around the US government shutdown. While we're talking about the international markets, I think it's the right thing to do to bring this in. How does the US government shutdown rate with us with Brexit, and how important is that to us here in Europe on this side of the Atlantic?
Well, I think so far it's been something which we've been insulated from. The US government, let's be fair, is admitting there's a shutdown, but the US economy keeps chugging over. The one thing we're going to start to miss, of course, is if certain of the US economic indicators stop getting published, so we don't have an awful lot to go on. Markets might start to be a bit more volatile under those circumstances. But I think the real concern would be is if the shutdown continues to depress growth, but of course I think we need a much longer shutdown than we're currently envisaging. But that's probably the only way it will start to impact upon the markets and thereby on the European economies, because let's face it, we've got enough problems of our own to worry about without having to worry about the US as well.
Yeah, absolutely. Alexandra, I want to go back to you. A couple more questions coming in. Is a no deal now off the table? I've been hearing a lot of analysis to suggest the markets are now saying, well, and in fact I think this was reflected in Chris Benodi's statement before the weekend, the lead manager and founder of OD Asset Management, and he was an arch lever, and he was saying in a letter to one of the newspapers over the weekend, he now thinks thinks there's more chance that we will end up returning to our original relationship with Europe. And he says we're in for a monster rally on UK stocks as a result, a monster rally in sterling. Whether or not that comes about, this question here is a no deal now off the table, relates in part to what Chris Bonodi is thinking and his turnaround in his direction. As a political analyst, do you still rate a no deal as a possibility? Absolutely,
it's not off the table. It's the legal default. If no other agreement is reached by the 29th of March, that is what happens. There certainly isn't a majority in Parliament for a no deal, so they will do whatever they can to try and stop that happening. But obviously that has to be a concrete decision. It can't just be, oh, well, we don't want this. It has to be a positive vote for something else.
This then goes back to what Theresa May has been saying about the fact that she views her position as being responsible for the opportunity to carry out the original referendum vote and leave the European Union. She thinks that her deal that she's put on the table does just that. Clearly, there is the political view that no deal is off the table, but a lot of people say, well, hang on a minute, I voted to leave. What the terms were, I don't know, it's unclear. But if you say that that is still likely, do you think it's more likely, though, that given the political environment, that we will end up with something approaching a good relationship with Europe?
Yes, I mean, definitely what we're telling clients is that a no deal is less likely than an orderly passage either out of the EU or into another form of relationship. So, yes, I think that's something to still be thinking about, but it's less likely.
Peter, Mark Carney this morning, the Bank of England governor, delivered an address to the Parliamentary Select Committee, and he was talking there about the report that was released in the Bank of England this morning. He said banks are in a good position to deal with a no-deal Brexit. Do you think, I mean, he would say that because he's responsible for that. Is it your impression, the fact that the environment within the UK is now more robust than it was 10 years ago? Are we able to deal with this crashing out that some people call it if we do end up reaching the 29th on a no-deal Brexit?
Oh yeah, I mean, I think the financial sector is a lot better capitalised than it was 10 years ago. The Bank of England and the BIS and all the other responsible bodies have made sure of that. I mean, the bank itself reported the stress tests were very robust. They said, look, even if you get a bigger correction than we saw in 2008, banks would still have enough capital to continue to function. So I have no doubt that the day-to-day running of banking operations will continue in the event of a hard Brexit if we ever get to that point. But of course, there are other issues at work here, which, with regard to banks, not the least of which is the role of the City of London in the event that London is not quite as at the focus, in the focal point of EU financial services, given the loss of passporting. So that's a much bigger worry, I think, for the banking sector than anything else. Okay,
another question for you. Now that the deal has been rejected, this is obviously referring to the meaningful vote last night, what significant effect will it have on UK unemployment? Is there a connection here directly with this? I mean, we've been hearing about the fact we're at pretty much maximum employment at the moment, disregarding the sort of jobs they are, we are hearing that a lot more people are employed, and in fact record numbers are employed in this economy than have been. Of course, this is the main argument for those that say we want to get out of the European Union. We do have a robust economy. Do you think there is a connection between the vote last night and what's happening politically and unemployment? Do you see unemployment going up?
Well, there was a link. Obviously, it could be quite tenuous depending upon to what level you want to look at it. But I think if you look at the employment situation in the UK, what I think has been interesting is that there hasn't been a huge amount of investment. So what I think has happened is that many companies have employed labour rather than capital. Now, you could argue, maybe, that the lack of investment, which has been depressed, as it were, by concerns over Brexit, has meant that companies have instead just continued to add labour, which is, of course, one of the reasons why the productivity figures look so lousy. So you could argue that if this deal has been rejected, and if you believe, I mean, it's a subjective matter, of course, but if you believe that a no deal is less likely, then it might mean that companies are a little bit more willing to invest, which will in turn mean that the rate of employment growth slows a little bit. But I think on the whole, the employment picture will be dependent very much on what happens to the big picture macroeconomy. I think most of us are assuming that it's steady as she goes for now. So unemployment will probably remain relatively low.
Yeah, inflation out this morning, of course, 2.1%. We have been seeing a reading of 2.3%. Where's the Bank of England sit in this in terms of the bigger picture for Brexit? Because we saw them go through with that 25 basis point emergency cut in August 2016, and some say that was beyond necessary. And of course, they've now repaid that back. Do you see the Bank of England having any more need to raise interest rates this year, unless sterling drops a lot? And of course, it does start importing a lot of inflation.
Well, of course, if sterling drops, it'll likely be because there's been something gone wrong in the Brexit debate, which will probably preclude the bank from raising rates further. I do think that the bank wants to raise interest rates. It is prevented from doing so by the Brexit uncertainty. So long as the continuing concerns or saga about Article 50 go on, then this will probably mean that the bank is sort of trapped on the sidelines and can't implement the interest rate hike or hikes that it would like to do.
Yeah, Alexandra, let's get back to you and pick up on another question and a point that Ben Habib was talking about Refi 2, if it happens, referendum 2. Of course, I've been doing some research this morning on just what the questions will be. I mean, that itself is going to be very difficult if we go down the path of a second referendum.
That's right.
From your seat, do you see the need for a second referendum to clear the air, as some people put it?
Well, it would depend on what the question was as to whether it really would clear the air. And I think whatever the result, there would still be unhappiness among the losers. Where I disagree with what Ben Habib said is he felt that he thought it would be between no deal and remain. I don't think you could have just no deal as the only leave option. I think you would need to have some other kind of relationship there.
This is the problem, isn't it? It becomes so complicated.
Exactly.
I mean, Norway plus, Canada plus.
Yep.
Do we have Theresa Brexit's deal? It gets almost too complicated to entertain, doesn't it?
Well, I mean, there are various ways in which you can carry out referendums. That you could have it as a two-stage thing. You could have a simple leave, remain, and then amongst the leave options, choose one. You could have ranking your preferred options. There are various ways that it could be done, but it would certainly be very complex to get that decided in Parliament and to get even just the question through Parliament, I think.
Yeah, OK. Peter, I want to get back to you. This is a question from Alareza on YouTube. What will happen to sterling dollar? Now, we have referenced this before. I was talking this morning to one particular analyst and was saying that we could well end up with sterling dollar all the way down at possibly as low as 115 if we get a crash out. Do you think that's overplaying things? 115 is all the way down at the bottom of the chart here we've got on the screen. Substantial distance from where we are at the moment. In fact, I think it's probably a further 15% pretty much on from where we are at the moment. Is that over-egging things, do you think? In direct answer to this question, what will happen to sterling in the exit, the unfortunate exit on WTO terms?
Yeah, I think if you get the accidental exit scenario, then I certainly would think that 115 is not impossible. Don't forget, it's not even the lowest sterling dollar rate on record. You have to go back to 1985, I think, for that. It was 107 or something. So 115, we have been here before. But no, I think what would matter is the abruptness of the decline and the extent to which the market then processes the implications, because it could be the case that sterling, it could even get to parity, who knows, but it could easily recover fairly quickly once it becomes clear what the terms and conditions of that exit actually mean. So the initial knee-jerk reaction of the market may not necessarily be the one thing to think about. It's the longer-term path for sterling.
Yeah, OK. We haven't really mentioned any great depth. You did briefly refer to the equity markets at the top. What does all this mean for equity markets? We've been hearing a lot about the fact that the FTSE 100, packed with these internationally facing companies, have an effect on the currency markets. What is your overall view of where we are in terms of London being a good place to invest in?
Well, I think when it comes to equities, I mean, obviously a weaker sterling generally tends to be good news. We saw that in 2016. Of course, the difference was that back then, equity markets generally were doing pretty well. That's not the case today. There's a lot more uncertainty around it about. So therefore, I rather suspect that UK equities would become, as it were, the best horse in the glue factory if we see a decline in sterling. But it's not necessarily going to be positive for equities, just less negative.
Yeah. What is the link between political stasis and the economy? Is there one? I mean, Belgium survived, I think, more than a year without a government. I mean, if we have this ridiculous howl around without the government being able to do anything structurally with the economy, as an economist, what do you say?
Well, I think economies can continue to function for an awful long time without the need for political influence. But there will come a point, and I don't know when it is, when governments have to make decisions about budgets, taxes, spending, And that will start to impact upon economies. So 12 months perhaps of political status is one thing, of even no government or next to no government. But once you go beyond that, I think we would be right to be quite concerned.
Yeah. Alexandra, one final comment as well from you. What is your immediate thought on where we go from here politically?
I think the next few weeks are actually going to see much more of what we've had so far, which is just a complete deadlock and no real progress and just continued uncertainty.
Okay, well, look, I thank you both very much indeed for your time, and thanks for answering client questions. It's been interesting to get your thoughts on this. Alexandra Kellert there from Control Risks, and Peter Dixon from Commerzbank taking us through these questions from you, from clients. I thank you indeed for your time in putting these questions down. I hope we've done you a favour in getting those answered for you, and that we have done that to the best of our ability in the context of what is at the moment a market which is seeing small gains at the moment for the FTSE 100, but gains on the currency markets for sterling against both the euro and the US dollar. Thanks indeed for watching our IG Brexit live show, and as I said to my guests here in the studio for their time covering the latest news. We are back as usual tomorrow morning at 7:30 a.m. I'll be with you with our early morning call, and we'll take in what is another political development overnight. Will Jeremy Corbyn get that vote of no confidence over the line? Certainly seems like the odds are stacked against him, but we'll be with you on the IG platform at 7:30 tomorrow morning to chew over the news headlines and take you through into the start of the next day's trading day.